What's up guys, and welcome back to another weekly steadily stars report with your host Talos. Now today's video is going to be a little bit different because I have to use a little different format, but of course the same applies in this video. These are today's topics. Obviously a brief discussion in our Boyz Talos Energy. We're going to go into some Twitter stocks news. They actually are in the lows this week. Then we're going to a new company known as Where Food Comes From. That's exactly what it's called. We're just going to briefly talk about this, but it's also in the lows for this week. And then we're going to jump into Microsoft. And then, of course, now we get into the highs of the week. And that, of course, is Naked Brand, Apple, UPS, Facebook, Spotify, Coinbase, and of course a little bit of the BTC prices, and of course Amazon being the very last topics, those all being in the highs. They're all related, I guess, because of the earnings report that was released this week, and we'll talk about that as we proceed forward. And of course the big news, of course, is Amazon and how that relates into the Joe Biden and India fiasco. And later in the video we're going to have a viewer like yourself tuning in and talking about Indian news in regards to what's happening there, and of course with COVID-19. Let's talk about a little bit of Talos Energy now. Talos Energy, of course, actually is a little bit high in the news today. Surprising, but not significantly much higher. We're gonna flip over to the charts real quick. It looks a little different than what we're used to, obviously, but basically, as you can see from the 1 week history here, it was kind of staying a little bit slow, and then right in the middle of the week it went higher, and then it kind of dipped at the end of the week. But it's still trading at around $11, so not too much of a significant energy. But of course, as Talos Energy, and named after myself, we have to keep that energy up. So let's move on to our next big topic. Of course, that being Twitter. Twitter now. What a difference there. We're going to definitely talk about this in more news, but if you look at the charts here, it's pretty much stagnant for the most part. Pretty much stagnant, and then it dipped down right around, I think, Wednesday time. Oh no, actually today on the 30th. Right around 13:15 time frame. And then it continued to go down from there. We're going to find exactly why they went down. Let's go ahead and flip to some articles now to see what happened. It's probably the earnings report, but we're going to definitely see exactly what dived it down. And we have a, later on we're going to have a viewer as well talk about this. Yeah, let's go and flip to some of the news. So with this article right now, Twitter earnings actually beat expectations, surprisingly. But why did the stock tumble? This is an article that was released earlier today. It says here, Twitter recently set out an ambitious plan for growth, spurring a wave of optimism in the stocks. Thursday's earnings were the first opportunity to gauge the company's progress to its goals, but the earnings beat wasn't enough to assuage investors. Another article we found is from CNBC. Twitter stocks plunge on users miss and low guidance. That's the big one. When there's like no guidance at all, typically that's when people lose faith in a company. Of course, that's when the stocks massive sell-off from investors. They don't really believe in the guidance provided by the company to say that it is a good long-term investment. So of course that's going to lead to a massive sell. So we kind of go into more detail with this. The company reported revenues of 1.04 billion for the quarter, which is actually up 28% from 808 million a year prior, but it still went down. Wow. Twitter guided that it's expecting a revenue between 980 million and 1.08 in the second quarter as well. Analysts were expecting a guidance of 1.06 billion on average, according to Riven. Twitter's total number of monetizable daily users grew about 7 million from the fourth quarter to 199 million, but fell shy of analysts' expectation of 200 million. Now, the only thing that really drew the attention from this article is this sentence right here. The company says that it's too early to understand the impact of Apple's privacy changes in the iOS 14.5. However, Twitter pointed out that its integration of the Apple SK ad network enabled the company to increase by 30%. So let me see some of the changes that they talked about here. Some of the changes here, it will notify users when apps are accessing the data's microphone, camera, clipboard, and other sensitive data. So it doesn't feel like it would affect it that much. If anything, I think it's like a minor affection. I mean, from all the articles that I found so far, it looks like the only reason why it went down is because of missing 1 million users. That to me, that seems such a significantly low number, because obviously they expected it to grow to 200 million users, but it only grew to 199 million. But it still grew 20% year over year. So in my eyes, just from what I've seen so far, it looks like it's actually one of those like small little minor gripes about it. So there must be more something else driving that market to go down. But yeah, one point that was brought up is obviously the growth of this was because of what happened, of course, with the pandemic. A lot of people are online using their phones, checking out the news via Twitter, talking via Twitter, and that's probably why that massive rise year over year. Now, I guess the concern that a lot of people might have is because people starting to open up, more people are going out, there'll be less people. Now, we talked about this last week when we talked about Netflix, people going out more. So people are like actually unsubscribing from Netflix. So another possibility to that, to kind of extend over from last week's news, is less people are likely to tune in, be active on Twitter, because of course what's happening now, you can actually go out in the world and see the news versus actually seeing it on the social media. But that's just a minor idea what it could be. Obviously, if you guys have any idea what can drive a stock to plummet that far down in like one day, let me know, because right now I'm not seeing anything except for the fact that they just didn't meet that expectation of 200 million users. Regardless, let's talk about something else in the news. Now this one is a funny little stock known as Where Food Comes From. Now I believe this is actually a pretty new stock. I don't, because there's currently like no data whatsoever on it. So if you flip over to the charts real quick, we have one needle right now, and it looks like it went down. So I don't see any history at all. Let's look at that. Is there all history? Okay, here we go. So this is from. Okay, so they're not new. They started back in 2007, and they have been going up. And of course, right around December 2020 is when they really spiked up and kind of like been stagnant for the most part. But this week alone, they were definitely in the downs, and that's what we're showing up here, that it went down. But let's find out why briefly. Where Food Comes From Incorporated engages in the provision of food production audits. It uses rigorous verification process to ensure that claims made by food producers and processors are accurate. Okay, so they're kind of like a QC type of verifications. So obviously they are super important. Let's just see what drove the stock down nearly 12% in today's market. Now, there's not much news on why the stock went down because of the earnings report that's reportedly happening next week on May 6th. Now, the reason why a stock would go down before the earnings report is similar to what we talked about last week, where people don't believe that it's going to break that earnings report, and thus they want to sell at a high point versus waiting until the reports come down, and of course is going to drive that stock further down if that's what they believe in. So that's the only reason why I can see it driving it down. So a very simplistic reason, yes. There's no major negative news that would drive it down. There's no positive news. It's just the fact that the earnings report will be available next week. And they have a little schedule here. Pretty much around 10 a.m. Mountain Time is when they're going to be doing the conference call on the earnings report. From what we understand, this is the most trusted resource for independent third-party verification of food production practices in North America. It's kind of like a wait-and-see approach to see where this might take off. But right now, if you guys are invested in it and think about selling it before earnings report, it's totally up to you how you guys want to play this. Obviously, I'm not a financial advisor. I can't tell you what to do with your money. But what I could suggest, of course, is today's sponsor. Now, of course, today's sponsor is our buddies over in Public app. Now, Public is a great investment app right in your fingertips where you can interact with other investors similar to what you have in your niche. You can follow exactly what they have. You can follow their advice if you guys want to. And the reason why I use it because I love the fact that you can just interact with other investors to what you are interested in and see why they bought a certain stock and why they sold a certain stock. And of course, if there's any news articles, they will pop up periodically in your notifications of like any interesting news of stocks you guys follow. And of course, if you guys use our affiliate link down below, you get up to $50 worth of a slice of stocks. Now that stock could either be a Tesla, an Apple, Amazon even, Netflix, any of their suggested stocks, and of course any stocks that we talk about in today's video. And if you guys are down for that and want your free slice of stock, definitely check out our affiliate link down below. And of course, we'll see you at Public Stocks. Now, back into the main topics for today. Now, the next topic here is another stock that also fell in the lows, and of course that is Microsoft. Now, Microsoft is one of those interesting beasts, of course, that you have to follow. One of the most active, and of course, a $1 trillion company. We briefly talked about this in our last video, where we talked about Microsoft potentially wanted in talks with buying Square Enix. Of course, that was ultimately proven as false, but it still has that lingering idea, like, could they really buy a company like Square Enix? Now, Square Enix, of course, is right around a $40 to $60 billion company. And of course, Microsoft well above that $1 trillion mark, so can easily afford a company like Square Enix. But of course, similar to what Chrisora mentioned in our previous video, more than likely they probably won't sell to an American company. If they were to sell, they will probably go to like a more Japanese company like a Sony or something like that, so that way it stays within Japan. But of course, like I mentioned, that was proven false. But they're in the news again today of like going down for the week. So let's find out exactly why. Before we get into the news, this is pretty much their chart right now. As you can see, early in the week, they were pretty much stagnant for the most part. They actually went slightly up before the earnings report, and then right when I think Wednesday hit, it went down. And then it went down yet again on Thursday, and now it's slowly kind of picking back up. But it was as high as $262 and went as low as like $250. That's a huge drop. Let's look at some of the articles that we found real quick. Obviously, it relates to the earnings report. Even though they beat their expectations, the stock fell still. Why? Let's find out. After 3 consecutive record closing highs, shares dipped in the aftermarket trading despite another quarter of more than $40 billion in revenue and $15 billion in profits. Decline lessens after forecasts. Now, from this paragraph I see here, it also relates, of course, to that damn pandemic. Now, of course, Microsoft shares have been increasingly going up from all the shares for its personal computer sales, collaborative softwares, and cloud computing adoption during the pandemic. However, during the Christmas, even though they surpassed $40 billion in quarterly sales and $15 billion of it being in quarterly profits for the first time, it's of course due to the pandemic. So even though they broke records, it's only because of what happened during the pandemic. Like, I guess in a way fearful that they can't maintain such a high growth going into the later months, because of course people are now starting to go outside. The states are opening up, similar to what we talked about with Netflix and any of the companies mentioned before. There's not a lot of faith in the company going forward to potentially break any more of those quarters. Keep in mind, guys, that E3 is around the way, where they're going to be showing a lot of Microsoft related games, but at the same time, Xbox in general is only a small portion of the Microsoft stocks. So if some like news comes out for the Xbox that might actually trigger a positive growth, we might not, it'll be a small little dent in what Microsoft could potentially do. So certain months is going to be kind of iffy for Microsoft. So it's kind of like a wait and see approach to see how this goes. But for the most part, this is why it's been kind of like stagnant, because the investors don't see how they can do another great quarter as people are starting to go out more. Because people were staying home, more businesses were staying home and doing businesses from home. Of course, increase the productivity of Microsoft softwares in the market. That's just my interpretation of what might have happened, but of course you guys always correct me in the comments down below if there's anything else that I might have missed, and of course I probably missed a lot. Yeah, according to this here, the cloud computing software Azure grew 50% in the first 3 months of the year. However, Microsoft did not provide raw numbers of Azure performances, unlike rivals like Amazon. They have their own web services, and of course Google has their own Google Cloud services. Yeah, it says here, strong market for PCs helped the later segment. Big gains for Xbox helps as well, with the new Xbox Series X and Series S consoles leading up to the hardware sales more than tripling, and continued growth in the software and services. So exactly what I talked about. The holidays is always going to be a big month for any investors, and it shows right here. And that's why a lot of people are pretty much going to capitalize on their gains during the holiday season. And that's why there's that massive drop off. Now, we talked about a lot of these companies already before, but a new company that kind of went into the fray here is a company called the Naked Brand. Now, I personally never used any of the Naked Brand items, but this is the chart that we have right now. The earnings report has been released for this as well. It shows a little spike here on Friday. So we probably won't harp in too much into it, but it definitely shows here that before they announced the earnings report, people were doing a massive sell-off because they didn't think it was going to beat it. So as you can see from the chart here, before the earnings report actually did hit, It started going down through most of the week, and then when Friday hit and the earnings report went public, that's when it's kind of spiked up. So kind of simplistic reasoning there, so we don't have to go too much in depth with the reasoning of why it went up, but it shows that they did beat the earnings report and people see the faith or the guidance in later in the company. So it's gonna be pretty similar to the rest of the news here when it comes to like Apple. Apple, of course, didn't go as high as they would like. There was a little bit of a spike on Thursday when the report happened, but then it quickly dwindled down. So we'll probably look into that a little bit more on why people were selling off of Apple. But let's look at UPS for a second here. UPS actually went up in value, one of the highest highs of the week. And of course, it was that earnings report earlier back in Tuesday. Facebook, similar case, went up right around Thursday is when they released the report. Shopify, also similar, back in Wednesday. Coinbase, now this is an interesting beast. We'll probably talk about this a little bit later. And of course, Amazon being another one, but which we'll discuss a little bit later. They also went up on Friday, but not as much as we would like to think. Let's briefly talk about Apple real quick and why it didn't go as high as it would like. Now, from the article that we have here for MarketWatch, why Apple's blowout earnings aren't boosting its stock. Now that's what we want to know. What happened here? Some analysts worry about the sustainability of Apple's blockbuster performance once the pandemic subsides. Again with the pandemic. This seems like a recurring theme. Yes, again. You have to think. How would this pandemic affect a stock? All right. Amazon Inc. stock didn't get much love for investors even after the company's delivered what one analyst described as a blowout results for its March quarter. Shares of the smartphone giant ended Thursday's session equally flat after being up as much as 2.6 earlier in the session. Despite the strong results, there are questions of how long Apple's hot streak can continue. Leaving aside issues like supply constraints, which Apple estimates could have $3 billion to $4 billion negative revenue impact on its June quarter results. That's huge. Some analysts have expressed that Apple's booming performance during the pandemic could mean tough comparisons later in the year and beyond. Similar to other stocks we talked about in today's video, exactly what we talked about. Now, when you compare it to last year's performance, that's going to be a huge hindrance of how the stocks will perform this year when essentially people are more out and about. I guess you can say the pandemic is not as affected or as much of a concern, but of course it's still out there. Obviously, we still need to be worried. We still need to be careful out there in the world. But at the same time, how will this affect companies that did so well during the pandemic to now when people are starting to, I guess, be more eased on it and like, of course, more vaccines going out and et cetera, so forth. So a lot of investors are worried how this will affect their investment. So might as well sell when it's super high and you get most of the money and then buy back up when it goes back down. If you are a long-term investor, this won't affect you too much. Just keep holding, maybe buy in when it drops lower and just continue gaining that profit in the long run. But if you're more of a short-term investor, I can understand why you want to sell at a high so you capitalize on the profits. But you know, you never know how these things will fall later in the year, especially when you compare it to the next quarter. All right, guys, so moving into the next topic. This is going to be a brief discussion, but basically some big news, at least I think is big news, that came out in Coinbase from last week. Now, obviously, the stock itself hasn't really been too significant. It's kind of floating around a $300 mark. I got an email today from Coinbase saying that Ethereum 2.0 is now able to be staked in Coinbase. And that's huge. That, of course, will affect those who has Ethereum. And so I definitely went ahead and any Ethereum that I did have, I definitely went ahead and staked that into the Coinbase app itself. For a up to 6% APR, which is huge. So according to this article right now, is Coinbase stock a buy right now as Bitcoin jumps and Ethereum hits record highs? And of course, the reason why it went record high, I think it's almost 3,000 right now for Ethereum. I could be wrong, but last time I checked, it was like 2,900 early this morning. It could actually be up to 3,000 right now for one Ethereum, because of course it's Ethereum 2.0. Now what I will say about Ethereum 2.0, like this is a nice passive type income that you can potentially have. Now obviously it makes more sense if you have a lot more Ethereum than what I have, but at the same time it's still a 6% APR, like an interest that you get in returns throughout the course of the year, which is pretty huge and significant when you think about it. When I did it my calculations earlier, if you have 5 Ethereum, in the matter of in a course of 1 year, you get $750 worth of, I guess, bonus income, like passive income for the year. And when you think about 5 Ethereum at the current price that was bought in, I think it was only like $12,000. So $12,000 and you get $750 free Ethereum throughout every single year. And of course, it's not always guaranteed to be 6%, of course, but currently that's a pretty decent percentage. So for those who are invested in Ethereum for the long haul and want more Ethereum by staking Ethereum, and you don't plan on selling it or anything like that, definitely consider staking it in Coinbase. Super easy to do. And of course, you get free Ethereum in return as, I guess you can say, dividends. But of course, that is amazing. And if you want to, you can also reinvest those staked Ethereum and to increase your current stake. So you just, it's like a ball of like income, just especially if you don't plan on using it for the long term. I think that's a great passive income, and it's just nice to see that we're actually getting something. I kind of wish Bitcoin have something that's similar to that, but at the same time, people are still able to mine Bitcoin, people are still able to mine Ethereum, and in a way, like, this is just another way to just get more Ethereum and more Bitcoin in the long run, if they decide to go to more a staking approach for Bitcoin in the future. But I don't see that happening. But at the same time, like, we can definitely see the impact it had on Ethereum with the price growth in just in a short matter of time. All right, guys, the final news for today, the big news, I think, is Amazon. Now, Amazon also released their earnings report earlier. I think Friday was when they released it. And as you can see from the charts, it didn't really impact it that much. There's a little bit of an increase if you look at the charts here. It was early in the week. It was as low as like 3,340 and went as high as 3,500. That's about a $200 growth, but at the same time, that's not huge when it comes to Amazon. That's in a way, I think it's only like a 5%, maybe 5% growth, if you want to call it that. But there might be a reason why. Before we go ahead and talk about this a bit more, we do have a caller coming in right now to talk about a little bit of Amazon and, of course, some of the news associated with Amazon in the future. So, hello, do we have who do we have in the call right now?
Hello, my name is Paul. I'm a first-time caller, and I'm very excited that I was able to get on the line.
Very nice. How you doing, Paul? Where are you calling from?
I'm calling from the northwest of the UK.
Very nice, very nice. Obviously, are you invested in US market?
Done as much reading as I can, but when it comes down to it, I've not pulled the trigger on doing the investments due to volatilities.
Of course, guys, we are messing around. Obviously, this is our good friend Liam from the UK, a good friend of mine from the collective. Obviously, he is not Paul, but welcome regardless, Liam. Welcome to the Studly Stocks Report.
How's it going, guys? Glad to be part of the Studly content.
Yes. Now, there's a few articles that we found and kind of pinpointed on Amazon that may indirectly impact Amazon in a way. Well, we'll kind of talk about this real quick. So the first article we have here is Amazon's blowout. Amazon makes a full house for the big tech. Amazon rounded off a banner earnings season for internet platform companies, posting a net profit of over $8 billion for the first quarter, more than triple the previous year results. Familiar drivers were at play, of course. Revenue from cloud hosting rose 32%, while the company's advertising business grew as nearly 70%, up here by a lower base. Amazon stocks were up 2.4% at a new record high in the pre-market trading. Similar to what we talked about before, the reason for this massive growth year to year is, of course, that damn pandemic. Now, we guys know this. Liam, of course, definitely knows this. Just from a consumer perspective, Liam, like, this makes sense, of course, why it went up, right? Year over year.
It's one of those steady things that has been proven in over a period of time that people saw that the market was going to start opening up for their opportunities to start moving toward hitting people's homes, where they can start really hiring more and also delivering more.
Yes, good, very good point. Like, obviously, with the demand of Amazon, they're hiring more people. I've been seeing a lot of ads, like on Facebook and YouTube, of like, I guess, employees of Amazon saying how great it is to work for Amazon. I'm not sure how true that is because I have friends who work for Amazon and say otherwise, but I'm not gonna go into those details. But it shows that they're definitely hiring a lot more people. And of course, it translates to demand of Amazon right now because a lot of people during the pandemic were at home, either bored or just want to buy stuff or need stuff from Amazon, and they will buy it from them and get it shipped over because of the hands-off approach. People didn't want to associate with like actually going to a store or a market or even groceries, for example, to buy stuff. They rather just like have stuff shipped to them. And of course, that's what usually impacted during last year. When you try to compare year to year, it's gonna be very hard to compete in the next quarter earnings. And if it's reflected here as well, why the stock market hasn't increased dramatically, because a lot of investors don't believe it's going to beat last year's records, because last year's records was huge. That was during the height of the pandemic where people are using Amazon. And obviously we're not going to break any of those expectations from previous records.
And I think that is part and parcel of the problem. Year in, year out, the higher investors have always tried to seek the better next year, double if not more. Whereas a sustainable growth that is comfortable and organic is a lot more susceptible to have a lingering market effect rather than, you know, trying to push to get, for example, a 200 million users but only falling short by 1 million type deal.
Exactly.
Coming from.
There's also a bit of news that might relate to Amazon just a little bit. But of course, this article right here that we have, Biden set to ban most travel to US from India to limit the spread of course, that pandemic disease. Now, this is like an indirect, of course, relationship, because obviously, we kind of briefly want to talk about this because obviously throughout the entire episode, we've been talking about the pandemic, how it's been affecting the world and how it's still affecting the world even to this day. And of course, how that'll affect into the stock market going forward. What do you know about this, Liam?
From some of the articles and some sources from all over, kind of made sure that I've refined this information, that basically the oxygen supplies in India are at critical levels for medical use. They are asking every country in the world they can to reach out to help send medical equipment, as the situation over there is at the point of they're making makeshift camps for those that have passed. So it's kind of a critical situation to the point where even the government have to ensure that the oxygen tanks and medical equipment have to be escorted by armed courier services because of issues of theft and stealing of such medical equipment before they even get to the hospitals, like between villages.
Yes, and according to this article right now, the total deaths have surpassed 200,000 and cases are nearly 19 million, nearly 8 million since February alone. That is huge. And of course, like Liam was saying, other countries have imposed similar travel restrictions on India, including the United Kingdom, Germany, Italy, Singapore, while Canada, Hong Kong, and New Zealand have suspended all commercial travel with India. Some of the stuff that was talked about here is, of course, the suppliers include 1,000 oxygen cylinders, 50 million N95 masks, and 1 million rapid diagnostic tests. The United States also have redirected its order of the AstraZeneca manufacturing supplies to India, which will allow it to make over 20 million doses of COVID-19 vaccines, according to the White House. Even though the US and maybe other places around the world are getting slightly better, other places like India, in this case, are actually getting a lot worse. So stuff like this also impacts the market around the world. We talked about this before with Amazon. We talked about this with Netflix. Kind of a minor I guess, hindrance. But in the long term, when it comes to like Moderna, Johnson & Johnson, or even like Pfizer, those are stocks that are probably still going to go higher and higher because, of course, distributing these vaccines out around the world. Obviously, it's going to impact the market as a whole, whether it be for the positive or for the negative. And obviously, we won't go into too much politics. This is not what this show is about. We're not going to be talking about any of the implications of like how this will affect the political market. This is just what we're showing in facts and numbers in the stock market. Obviously, we're not financial advisors. We're not even politicians for that matter. So we can't get a full description of what we see here, but we can definitely see how the numbers are affected in the market from news such as this.
I think really my only side comments would be on this scenario would be the fact that it's going to take a long time for India, most of all, to really recoup and stand back on its feet.
Exactly. And that's a huge number. That's a huge number.
It is. It's a very solid percent of the world population, and also a very foundation of many industries. So to see that there could be, from factory works to deliveries, that will be hindered. Also, within this scenario, there's going to be more ups and downs to come in certain aspects that we might not even see coming.
We'll definitely be on the lookout for this in terms of the investment standpoint. But I guess going forth, when it comes to like stocks like Moderna, stocks like Pfizer, those are probably still going to climb higher and higher as more, I guess, strains, more variants are discovered. Because I think me and Liam talked about this off screen, but wasn't there like a new variant that came about in the UK alone?
There was news spread about I believe it was a London version and a Bristol version. Because of the fact that it's a virus, it's one of the most rapidly mutating things. Virus doesn't rest. The fact that it's had more chance to spread all around the world, you will see variants from different areas. They will, as I've mentioned, the Italy, India, Brazil. There's India. From what I hear, they have a double mutation that.
Wow.
Literally way more infectious and has a horrific spreading rate, which, considering that a certain population over there would be considered worse than on the breadline, would be very susceptible.
We'll try not to end this stock in a downer, but keep in mind, guys, it's out there. So definitely still wash your hands, be protective, and be courteous of others around you, because some people might be more susceptible to this disease, to what you may. Even though you might have the vaccine, it doesn't mean that you're guaranteed to not get it either, especially when there's booster shots being talked about. So definitely, just be worried out there, because it's still existing. And if you do decide to travel, be careful where you travel to. As of right now, India is considered a red, I guess, country for travel restriction. And of course, that pretty much concludes today's stocks. Now, obviously, we are not experts in this field. We're just any articles that we find, any news that we find, obviously are just based on what we think and know. You can always comment down below if there's anything that we might have missed. Obviously, special thank you to our guest Liam in today's video.
I always appreciate it to be here, and especially I'm happy to be a part of the Studley Boys.
Exactly. And of course, more to come as we get later in the news. But of course, that concludes today's video. And of course, if you guys haven't already done so, definitely consider giving us a like in this video, subscribe if you haven't already done so, and of course, more weekly Studley Stocks Report with your host, Talos, in the following weeks to come. If you guys want to check out the collective, where we do a lot of the Yu-Gi-Oh, Pokemon, unboxings, reactions, and little competitions here and there, and of course some gameplay stuff as well, definitely check out our collective website, link down below. Liam, of course, will be there to greet us with his smile, joyous, and happiness every time his voice is appearing on screen. So of course, thank you again, Liam, and we'll definitely see you in the next one. So until next time, this is Talos and Liam signing out.
Thank you, guys. Peace.